Firstly, I would love to acknowledge the Torres Strait and Aboriginal people as the first scientists, astronomers, geologists, and ecologists, engineers building on their deep knowledge about the nature of the world in which we live in for thousands of generations. Here in Australia, scientists today, much like entrepreneurs, continue to build on this tradition of inquiry, curiosity, and custodianship, adding to the rich social and scientific knowledge of the country. I respectfully acknowledge the Yurraga and Turrbal people as the traditional owners and First Nations people of the land in which I'm sitting from today. And I recognise this land was taken. I pay my respect to elders past, present, and emerging community leaders, and I also extend respect to all First Nations people who may be on the call today. So thank you again once for joining. My name is Pauline, and I head up River City Labs by day, and I'll do multiple things by morning, night, and whenever I can. But I would love to do a bit of an intro to our panelists shortly. We have the lovely Jodie, Noga, Rebecca, and Fleur as well, who we will do a little bit of a different intro in a moment when we kick off with the questions. For logistics, just so you are aware, we will be sharing the recording post for anyone who can't stay for the whole event, or if there's anyone who wasn't able to make it today. So feel free to share that out to your network as well, especially females who are capital raising, or anyone from a diverse background who is capital raising. And also, just so you're aware, we will have some questions, and then we're going to try and squeeze in a great chunk of time for Q&A so that you guys can get your questions answered. So please pop them in chat. We'll try weave them in as we're going through if we see them. Otherwise, we'll have a block of time at the end to also do that. So let's get started. And firstly, I would love to kick off with Jodie. So Jodie, prior to being the COO of Fracta Ventures, you have been a founder yourself, a co-founder yourself, and you've done an amazing I would say mentorship advisory role across the startup and ecosystem as well, in addition to building your own company and exiting to Airtasker. So in that, can you share a bit of your personal story and your journey in exploring capital raising for your own business?
Yes, of course. Thanks, Pauline. Hi, everyone. Great to see you all. Yeah, so I guess I started my career in the corporate world, actually, based in Sydney and then London, selling support service contracts to telcos like Optus and banks like Royal Bank of Scotland. Fairly dry kind of stuff. And I realized within 4 years that corporate life wasn't for me. I actually saw a bunch of redundancies and knew at that point I didn't want to rely on a company for my financial survival. And so that's, I guess, when I caught the entrepreneurial bug. I then went and joined fashion designer Leona Edmiston as she launched her second label in pursuit of exploring my passion for fashion. And I was the general manager there for 9 years, and I guess really treated the business like my own. And in that time, we opened 25 stores in cities around the world, including LA, London, Hong Kong, and also one of the first e-commerce stores in the industry back in 2007. We grew the team to over 50 staff and annual revenues over 10 million, all bootstrapped. And I learned a lot during that time about extremely tight cash flow management, team culture changes over time, protecting currency exchange risk, managing relationships with Chinese manufacturers, a whole bunch of stuff. How to tie a sash, lots of things, but still yearning to really create my own business. I started one of Australia's first home services marketplaces called Occasional Butler in 2011. My husband and I built the tech and the community from scratch, and really strong in Melbourne and started off in Sydney as well over 3.5 years. And then we were acquired by Airtasker. We did at that time start to capital raise, like we sort of bootstrapped to the point of 3 years and realized after that and Airtasker launched just after us, and so we realized just after the 3-year mark that we were really going to need some more ammo to continue to compete. And that's when we started to go down the path of capital raising. And back then, that would have been 2013, there wasn't much of an ecosystem, like, at all. There was about 3 VCs. There were, a few angels that were deep undercover. It was really, really difficult. We actually worked with an advisory group who promised the world and delivered nothing. But we did in that process establish a board, and that led us through down to the path of acquisition. I suppose we can go into more detail later if you want. So yes, so also whilst we're running Occasional Butler, we started a co-working space in Melbourne called Depot 8, which we just closed down at the start of COVID. But ran that very happily for 8 years. And yeah, since selling as well, I've just done heaps of work mentoring in the ecosystem. So with Startmate, Innovation Bay, Wade Institute, and then most recently running SBE, an accelerator for women-led business, up until the point of Tractor, which we started in December last year.
Okay, and so just for the benefit of the audience, and tell us what Tractor does.
Yes. So Tractor exists to give founders options and leverage. So we really, want to be able to support. We've found in our experience that there are many paths to success, and it's not always the VC path. And so we like to talk about rockets and tractors, and rockets are very exciting and sometimes land on the moon, but they're also very expensive, and a lot of them blow up along the way. And there's a lot of those casualties that you see on the VC path. And also lots of founders just don't want to go on that path. And so we're creating an option, and we're starting with revenue-based finance. So what it is a loan basically that floats with your revenue. So you borrow against your forecasted revenue and you pay that back over time. So it's super flexible. And we also wrap ourselves around you to give full support to you as a founder with our team and our deep network of investors.
And you do have one, as you know, I've stalked everyone, and I always do for all of these sorts of panels, but more importantly, I think, Tractor, as well as then now leading into Black Nova, your network it's like a enrichment of experienced, highly capable founders who have done it, who have been there, who have, tried the tribulations of building their own companies. And I can only imagine have a deep sense of empathy as well for the journey.
Yeah, we're extremely lucky. We've got over 70 investors into Tractor, and they're all bootstrap founders, exited founders. There's some angels and some family office, but they're incredible. They've had amazing success. They've invested in Tractor because they think we'll be successful, but more so than that, they've invested because they want to give back to founders, and also, participate in future opportunities with founders too. That if some of our companies in our portfolio are looking to raise capital after taking on some debt, and our investors are super excited to invest in them. So yeah, it's a nice fortuitous circle.
Oh, so thank you for sharing some time with us today. So over to you, Noga. You have an esteemed career as a corporate lawyer in Australia as well as overseas. I was super impressed with what you've done, and you've founded and successfully also exited your company, Urban U. This disrupted a lot of the industry in regards to home services a few years ago, and you now are a partner as well of Black Nova Venture. So you can give us a bit of a VC view, but also can you share with us your actual pathway to exiting and your form of capital raising along the way as well?
Yeah, absolutely. Thank you for that lovely introduction. So look, there's probably a lot of similarities actually between my story and Jodie's story, and I suspect that a lot of women who start businesses do it after going down that corporate path and becoming disillusioned with that. And so that was me. I was a corporate lawyer. I worked, as you said, in Sydney and London, and was the general counsel at Yahoo here in Australia. And it was there that I started getting involved in startups and really loved that ability to kind of do anything. So I was the lawyer, but I ended up running BD at Yahoo because there was no one doing it. And so, I just put my hand up and I could do that. And it gave me a false sense, I would say, of confidence that I could, run a business. And so I connected with a colleague of mine there over our shared kind of experience being busy working professionals, wanting to get stuff done around the house and never finding the resources we needed to get it done efficiently. We saw people take a day off work to let a tradie in, and the tradie wouldn't show up. And it was around the time that Uber was launching. So everything was going on demand. You could press a button on your phone and get a car or a pizza, or you could go to Amazon and get a book in, under 60 seconds, but still to find cleaners and gardeners was a really inefficient offline experience. So we packed in our day jobs at Yahoo to launch Urban U, which was an on-demand marketplace for home services, curated experience. And we timed it really well. We rode that on-demand path. It was a time when it was still really great to investors to say you were doing Uber for something, because that on-demand space was still really open wide. And yeah, we did manage to raise some funding. We raised $2 million over the course of our journey, and I'll come back to that in a minute. We also, I think, being a lawyer, I had the benefit of kind of seeing opportunities to grow in other ways. So we started to see that there was an opportunity to acquire some competitors in our space. So we rolled up some of the other players, which gave us the ability to go to market saying we were the biggest on-demand home service player. And that ultimately was successful for us because one of the larger marketplaces here, Fleur, decided it wanted to go into on-demand. They tried it, they realized it was really hard to do successfully. And so they wanted to buy the biggest local player here, and that was us. And so we secured a great exit to Fleur after 6 years, which was really good. But along the way, I started getting involved in the ecosystem and really discovered I enjoyed helping other founders grow their businesses. I joined the board of SBE Australia, which runs the Springboard Accelerator programs. And I did that after doing the program myself. And the reason we did the program was because we were going into a fundraise and we realized the angel round we raised was really hard and really stressful. And we knew we were doing something wrong. We just didn't know what it was. We couldn't put our finger on it. And so we did the Springboard program, which absolutely transformed our ability to raise capital. And coming out of that, we raised $1 million round in under 2 weeks, which was phenomenal.
Wow.
Yeah. And so I'm still on the board of SBE. I work with a lot of female founders. I started mentoring. So I'm an investor and mentor at Startmate. And one of the things I realized was, like, one of the big gaps in raising money for women is that female point of view. Like, we need more women making investment decisions. You know, when we were raising for Urban U, we would sit and pitch to a room full of, you know, white middle-aged men about the difficulties in finding a cleaner. And, you know, we just got blank stares all the time. And they would say, oh, let me go and ask my wife. Whereas, you know, women kind of got it instantly. So I started doing some angel investing, and I have joined Black Nova as a venture partner. One of the reasons I joined Black Nova is quite similar to Tractor, where we're really made up of operators. Our investor base is people who've built businesses before, and we have this venture partner network of operators that surround the companies and help them grow. And it's the kind of venture firm I would have loved to have as my investor, because as we were growing our business, one of our biggest challenges was just, you know, it was new to us. We'd never done this before. We needed to talk to people who'd done it before. And so that to me is a real point of difference. And I'm also an entrepreneur in residence within Tractor Ventures and at UTS Startups and a bunch of other places.
Yeah, amazing work you're doing, and thank you so much for giving back to founders. One of my carrots when I talk to a founder who is going through the pits of hell trying to capital raise and getting rejections and no's and not really knowing where to point their finger, I incentivize them, going, don't worry, you're gonna meet that one, they're gonna back you, and then you're gonna get that money, and then you're gonna come back and invest in the other people just like you. So it is definitely an incentive and motivator to help other people keep going. So
yeah, and it is a virtuous circle, and we see that a lot. You know, I think the ecosystem is now getting to the point where there are a lot more exited founders that want to do that. You know, the Canva founders just announced that they're going to give the bulk of their wealth to support, you know, not-for-profit and other endeavors. So I think, and obviously the Atlassian founders have very significant family offices, and, you know, we're now seeing a lot more IPOs in the space, and so that's just going to grow.
Yeah, totally. And a lot more founders coming back from overseas successfully and giving back time as well as equity as investment. So it's a great place to be building a company, and a lot more opportunity for us. So I'm going to go over to Fleur. So Fleur, thank you for joining us. So I'm just going to go back and rewind the clock, because I know you started out as a journalist, which was amazing to see, and also some time in the media as well. And then went to serial entrepreneur. You've had actually multiple companies, from services to retail. And then you actually attempted retirement, which is funny to me because I know you as Fleur now. I couldn't imagine you being in retirement, because you are supercharging the Brisbane through freelancing gems, and which is actually a tech startup as well, probably a bit later stage now. But can you share about your journey so far with freelancing gems and capital raising, and also with your other businesses? And did you have to do any form of capital raising, and what did that look like?
Yes, certainly. Well, I had to come out of retirement because I was spending far too much money. And sorry, guys, I don't have my background on. It wasn't working for me. So,
Do not worry.
so yeah, I started off my career 20-something years ago as a television and print journalist in Queensland. Found my way into PR, which was an industry at that stage, very much in its infant stages, especially in Brisbane. I ended up having a PR agency for 16 years, and I sold that to a multinational out of the US. That business, I had offices in Brisbane, Sydney, the Gold Coast, and Los Angeles, and certainly that business matured and grew with me. And when I exited that business, it was a great day. It was in terms of, it was a fantastic sale. I was ready to go. I started that business when I was 23 years old. When I exited it, I was close to 40. So it definitely, it was time for me to move on. And it was time for the business to also spread its own wings. During that time, I also had an online beauty company, which I also successfully sold. So I think, there's a bit of a pattern in my career of building businesses to scale and exit. And yeah, I went into a little bit of retirement, which really, it was just some much needed time off after, almost 20 years in my own businesses. I really did need, in the past, I'd probably just taken every opportunity that came my way. And what I realized was it needed to be more strategic in the next decision. I have another 20 at least years to keep working, and I wanted to do something of some significance. So I really looked at what were the key values to me of what I wanted to do next. And there were probably 3 or 4. One of them was that I wanted to do more work that mattered. I knew I was going to do something in the female space. I've always been very passionate about giving women opportunities, and that's what a lot of my career has been about in terms of within my own businesses, or also the work that we were doing. Largely, a lot of my teams had been about 95% women. I love men, have a beautiful husband, wonderful father. I'm the mother of 2 sons, love men. But it is a passion of mine in making sure that women have opportunities and are represented. So I knew I was going to do something in the female space. I also knew that I didn't want to play small. I wanted a business that had the capability to grow internationally and to expand, hence the tech platform. I didn't want any barriers there. And so they were 2 of the main criteria for me. So at one stage, I was looking at women's only co-working. That was obviously before COVID. I'm glad I didn't do that. And then I think we were, I was constantly being asked for talent recommendations. So do you have a bookkeeper? Do you have an accountant? Do you have a great PR person? Do you know a digital marketer? Do you know a web dev? And sometimes I did and sometimes I didn't. So literally one day about, I'd say 2.5 years ago, I typed into Google female freelancer job site, and it took me to sites in the US. So I started looking at what the gap was in the market, and 9 months later, we launched Freelancing Gems. So Freelancing Gems is a digital jobs platform for women in the gig economy. So we place women in part-time, freelance, consulting, mat leave cover roles, but all, contract roles. We don't really do any full-time. And it is a talent. We have all the talent on the platform. So certainly employers, it's about introductions. Employers can headhunt off the platform. They can place a job ad and our members will apply. And, a lot of the women on our site are fully booked through Freelancing Gems. So we've been trading for about 15, 16 months. And we have currently 400 women actively looking for work. And we placed approximately 250 women in contracts in that time. So the demand is there. We've seen that the model works, and we have been in a capital raise stage, I'd say, for some time, because we've had quite an interesting journey.
So tell us a little bit about that capital raise journey. So how long have you had it open for? And do you mind me asking, or can you give a ballpark of how much you're raising?
Sure. So we have had, I've never raised before. In all of my other businesses, there hasn't been a need for us to raise. I've been able to, use my own funds, etc. And the businesses have grown quite dramatically quickly. So there hasn't been a requirement for it. But I guess the space we're in, digital jobs, we have a small window of opportunity to own this space and to also make some major impact. So, which is why we are looking to raise funds. So actually, when we launched this business, we had somebody who had approached me before we launched to say, I've heard what you're doing. I want to invest. I'm all in. We had lawyers involved, negotiations had taken place, contracts signed. The day the money was meant to be in the account, we were ghosted.
Wow.
So if I had been a less experienced business owner, this would have been devastating for the business. We literally were launching in 4 weeks. I have 2 amazing business partners. We have bootstrapped the business ourselves. We have been approached by a lot of other investment groups and different people, angel investors, VC, family offices, and we haven't found the right fit for a major investor. We have secured some investment and again, they approached us. I think it's been a really challenging road for me because I've been a CEO for 20 years. This is the first time I've capital raised. And I think I've been trying to do it the way I've been told that you need to do it. And I'm at a stage now where, where I think we're being more deliberate with who we are seeking to be involved in the business. And we're doing more due diligence ourselves as well. I think initially at first, I think we, probably just believed people that were approaching us. And we had we had a VC group that was launching a fund. It was a fund and it was launching. And they approached us 3 months into us being launched. And we were in due diligence with them for months. They actually used our business to attract other investors to the fund, told everyone they'd invested in us, but they've never invested a cent. So we have really had a very challenging road. And I think I'm a lot more wise to the challenges now. And I want to do it my way. I don't want to do it the way that we've been trying to do it, that I'm told is the way to do it, because it's not working for us. And I think fundamentally too, Freelancing Gems being so focused on a specific niche in the market, which is women and jobs. And also we're very passionate about closing the gender pay gap. Women in consulting traditionally charge up to 38% less than men. So that's a really big part in our business, is educating the consultants and educating the employers on what they should be paying for this type of work. We're not a race to the bottom. It's not bidding on jobs. It's not cheap work. It is paying people appropriately for great work, great quality work. And that fundamentally really does shake some people to the core. We have been in investment meetings that have largely been men around the table. And some of the things that we have had said to us have blown my mind. And keeping in mind, I've been in business for 2 decades. I've had I've had a man sit across the table from me and say, women and jobs. Now, is that a charity? And I'm like, no, it's amazing. Women work. Yeah.
I think everyone's jaws just dropped.
That's not even the worst one. We've also had, we literally also had a woman sit across from us, an investor, and say, I just don't believe the gender pay gap exists.
Oh, okay.
We also had an angel investor who approached us. And then they said, so women charge 38% less. What if you took that 38%, so you were taking their margin? And I went, but then that defeats the whole purpose of our business. Our business is to help women progress forward. So it has blown my mind, and I'm an experienced business owner of what a challenging path it is. But I think it's also about finding that right fit. Finding and like the ladies before me have both said, I think I'm so fired up that I need to be an investor moving forward. We need to drop the ladder down. We need to be helping more women. And I think what I'm experiencing is, let's not try and retrofit and sit at the same table, because I don't believe that the current system was actually built for our success. And I think we need to be looking at alternative ways to help more women actually get access to capital.
100% agree with you. And I'm pretty sure that's a fact. I don't know if anyone's read Venture Deals, but if you do have a read of Venture Deals, I think it's one of the earlier chapters. The people who actually designed the VC space, I'm sure Jodie and Noga can correct me if I've got this wrong, but I had to rewind it and listen to it a couple times over because I was laughing, because I did come from financial services, so I do believe this. But basically the way some of the terminology and the process for VC was created and designed for complexity to keep people out. And that was the case. Not necessarily people who were receiving the funds. It was actually to keep their competitors out the way they designed it, which is just like, that is what it is. So I love the what you ended with, Fleur, which is let's create some new tables and get it done. Drop that ladder. So over to you, Rebecca. You have had an amazing journey with Kiddo, and a lot of us do know who Kiddo is and what you're doing for all of the parents out there, but also the people who are looking to care for those parents' children. So you've now been in the market for the last 3 years, and you're growing your services and your book, as well as helping so many people's lives. You pitched earlier with River City Labs earlier this year and did an amazing job, and you've been capital raising. Can you tell us a little bit about your journey and what you've had so far?
Yeah, so my journey started three years ago. Kiddo's been launched for 2 years. So 3 years ago, I finished up. I worked for Suncorp Bank. I'd been there for 12 years. I was in a super male-dominated industry, a relationship manager. So I think I was one of 11 women nationwide that did the job that I did. I went on maternity leave, had my beautiful baby girl, came back to work and asked to come back part-time. And, the first response was, I don't think that's going to work. So it started from there. I really had to forge my way back to come back part-time. I was given the full budgets that all, my gentleman counterparts could do in a full-time role. I had to achieve the same in 3 days work. So it was a big step back into the corporate world. I guess I'd been on maternity leave and I'd really connected with a lot of mothers. I'd had that quality time with my daughter and just realized that there was more to life than hard and fast numbers and the corporate world. So I really wanted to, it really played on my mind going back to work that there was a better way for mothers out there. I would get asked to do a presentation on a Friday, which wasn't normally the day I worked. And I just panicked going, how am I going to get my daughter watched for 2 hours while I do this meeting that I've got to do? So yeah, it was a combination of going back to work and trying to juggle that. And then also just realizing that your life changes. You don't have time for yourself. You don't have time for friends. And there had to be a better way to find care for our children. So it was 3 years ago, I left Suncorp and started on my Kiddo journey. So I'm a non-tech founder, literally no experience, anything technical prior to that. Drafted out the whole Kiddo idea, went and found developers to come on my journey with me. Built a community before we launched because we are a two-sided marketplace, and got Kiddo out to market in 6 months, which was pretty incredible. We had 800 users ready to go. And since then, we are going to hit 10,000 users this week, which is super exciting. But in 2 years, we've got over 2,400 carers, parents that love and use our app all the time. And it was earlier this year that I started on my capital raise journey, which I guess at the time was just something that I thought was this big deal and really it would be really hard, and I didn't exactly know where to start and what to do. So I went out and I spoke with, I kind of explored the different pathways out there, crowdfunding. There were some other platforms out there that were really male dominated and they wanted an upfront check, and it didn't sit right with me. It's about, when you capital raise, understanding who your customers are, who your investors are, and really trying to match that as well. And then this wonderful opportunity came up with River City Labs, and I'd seen it before and the timing just wasn't right. But June applied and went, Kiddo's ready for this now. We need to take Kiddo to the next step. So applied for the River City Labs Accelerator and was lucky enough to get on board. And with the Accelerator program itself, it was a 6-week intensive to really not stop the business. Obviously, the business had to keep going, but have that allocated time to really hone in and focus on what needed to be done for the capital raise. So highly recommend accelerators, but everyone's got a different journey.
Payback, by the way. This is not a
for
sales
me, it was being a solo founder, I was kind of finance background, great, but there's so many different things you need mentors around you, you'd really need to immerse yourself in that ecosystem and community to get the most out of it. So in the matter of 6 weeks, went from a basic PowerPoint pitch, trying to do what I thought I had to do, to pitching in front of over 100 people here in River City Labs and doing it with confidence and opening up my seed round and having the confidence behind myself to actually do that, where prior to that I thought it was something that was big and hard and unachievable, but it really is. We're all here, we're business people, we're founders, we're in the industry. It is, women can do anything. So I think we've just got to back ourselves and believe in ourselves that we can really do anything. Yeah.
You've had an amazing journey. It's been great to watch and be able to be a part of in the background. Can I just ask the status of your raise right now?
Very close to closing. That's probably all I can say at the moment. Yeah, but super close to closing, which is great. But, that's been a 3-month journey. A lot of people would say that's quick. I found it very slow. I wasn't as great as Noga with the 2 weeks, but, 3 months is sort of, it's been a long 3 months. It'll be great to have it closed and just focus on our next phases. Yeah.
One thing I think is of interest, and I hope you don't mind me sharing, Beck, is there was many times, and we do this with, and everyone, you will go through this experience if you haven't already many times, is trying to find your investor, and where do you find them, and then how do you match them? Because I heard with all your wonderful panels, introductions, and your journey, it sounds like finding and knowing where you're getting that money from, and whether there is an alignment of mission and vision is really important. That played quite a role, Beck, in your raise?
Definitely. It wasn't just a matter of applying everywhere. It's kind of thinking, okay, I need to pitch to some VCs and just see what the VC feedback is. Are we at that stage yet? It's, I followed a number of family offices on LinkedIn for quite some time, and just understanding what their values are and their support and how they treat their investment companies was really good insight as well. So I highly recommend, if there are investment offices or companies that you're looking at or have heard of, follow them on LinkedIn and really understand what they value and how they promote their investment companies. We literally sat down and went through an Excel spreadsheet and worked out, okay, who does what, go to their website, what do they look like, who do they invest in, take it off the Excel or add it into the Excel, and they're the ones that I wanted to contact. So I made sure, it's for me, it was quite a personal thing. It was the success of Kiddo today in a pitch deck going out to, I didn't want it to go out to the whole wide world. I wanted it to go to people that I could really work with and that would really strengthen Kiddo and believe in it and help us go forward.
Thank you for sharing. So that we can continue to have Q&A, there are a few questions in chat. We'll come to those towards the end. We're going to do a rapid fire round now. So we're going to kick off with Jodie and Noga from a VC as well as an investor perspective. And we have 4 topics we'll try to get to. And then I'll go to Fleur and Rebecca to get the founder's view. So based on the importance, so that's these topics relating to. So key is, as a VC or an investor or venture group, when seeking capital as a female founder, how important is revenue at that point when you're raising, or no revenue? How do you critically assess it? So if we could kick off with you, Jodie, first.
Yes, well, with my tractor hat on, then it's definitely critical because it's revenue-based finance. So you have to have some revenue for us to base the finance on. But I think more broadly, I think the more that you can just get that initial revenue, there's no better first funder of your business than a customer. And so if you can get that initial revenue, then you don't have to try and prove that this concept will work. You've got the built-in evidence and cash coming in. So it is very important.
Thank you. Noga.
Yeah, I think you need to understand that investors are going to give you a check if they think they can make money. Like, their goal here is to make money through the investment. And so the more you can de-risk the investment, the higher chances of them putting in their money, but also the better valuation you're going to get, right? So if you think about that kind of continuum at the very beginning, when it's just an idea, it's a super high risk. They don't know if you're going to be able to pull it off. They don't know if customers are going to want it. They don't know if you're going to be able to attract a team. So all of those things increase the risk profile. So mean they're going to want a bigger stake of equity in your company to take on that investment. And then, so the further you can go along that track of proving it out, we can build an MVP, de-risked. We can attract some customers, de-risked. All of those things will build a better profile for the investment and help you as a founder get a better valuation as well.
Thank you. So same question for both of you, for female founders, and the importance and how you assess as an investor on the investor side. How important is team structure, the co-founder-founder relationship or complement, like how many people in the founding team, as well as tech experience and advisors? Quite a lot, but how important is that team structure for you?
I think definitely founder yourself. Like, I don't think, in my experience and what I've seen, it's so much the team and the structure, like as much as it is the founder and your attraction and your story. Like, it's just really telling that very strong story and proving that you're the one to deliver on it. I think that's way more important than tech expertise or team that you can then build around you. If you can tell a great story and show that you are that magnet for talent, then I think you're more than 50% of the way there.
Thank you. Noga.
Yeah, I mean, I have a different view on this as a founder versus investor, because as a founder, like, that was definitely, we were non-tech founders, and that was definitely a sticking point for us in raising money. And I think women have a harder time in proving they're going to be able to attract tech talent. Having said that, I think things have changed a lot, and there's no code platforms and things that make it much easier to get a product off the ground. So I think that necessity to have a tech founder on your team has decreased. But I 100% echo what Jodie has said, and especially in early stage investing. So Black Nova, we are seed and pre-seed, very early stage. And while the idea is interesting and important, and it needs to have a good market opportunity, we need the founders to have that real passion for what they're doing, because we know that it's a hard slog building a company, and there's going to be many times where they're going to be tempted to just quit and go and actually make some proper money working in a corporate. Like, it's going to be a lot easier in the short term to make money at getting a job than it is as a founder. So we need to believe that they're so passionate about what they're doing that they're just never going to give up. They're going to be sticking around, to figure out a way through. And also that they're the ones that can figure out the pivot, right? And so while the product is interesting, we know at the early stage it's going to change as you test it and things. So we can't get too attached to the actual business model or the product itself. It's more, will these people on the team be the ones to find the right pivot to grow this business into the opportunity that we know it can be?
Amazing. Jodie, based on same question, importance, what about product maturity and the market size? How important is that at the point of investing or selecting to work with a company?
Yeah, I think market size is definitely important. Product maturity. No, I don't think that's as critical. Like, if you can, I think it's more critical that you can prove that someone's going to pay for it. And if you've still got an MVP, but you've got people willing to pay for it, then I don't think that's a disadvantage. In my own experience, we built Occasional Butler fully. Like, we spent 1 year building it without doing any testing or getting any customer buy-in, and that was absolutely the wrong way to do it. And so, because then we had to then just undo it all and redo it to customer requirement. So I think, the more that you can just be iterating with your customer, the better it is. So product maturity would be not such a priority. Yeah.
Thank you. Noga?
Yeah, I'd agree with that. I think so taking market opportunity first, for a venture firm, critical, right? Like we need to believe, like I said at the beginning, investors are there to make money. So we need to believe that if you get all of these things right, if you get the right team, you get the right product, you attract the customers, it has the opportunity to deliver venture scale returns, which, you know, is like 100x return. So that is different with all the different types of investors. So I think it's, you know, interesting to understand that different investors will have different risk profiles and different return profiles too. But for a VC, that needs to be true. Where product maturity, I think it's more just proving that you can build something, you can get something off the ground and you can attract customers to it. In fact, what Jodie's saying is correct. If you've gone a year down the path just building and you haven't tested it with customers, like that is actually a red flag these days, right? Like, you know, just get the most simple thing off the ground, focus on that one crucial use case. What's the best use case? Who is the, you know, consumer that can't live without your product, and that one core functionality that they're going to need, and prove that you can build that in a basic way and attract customers to buy it. And that is far more valuable than something with all the bells and whistles, not knowing if anyone really wants it yet.
Thank you. Okay, so we're going to flip it. So Fleur and Beck, we go through rapid fire again. So just keep your answers succinct. Based on what you have experienced during capital raising this year, from both of you as founders, what kind of questions have you been receiving in regards to the importance of revenue versus no revenue?
I think it's a really interesting one, and it's been interesting for me to hear what Jodie and Noga have had to say, because we've had mixed reports, to be honest, and we do have revenue, and we've had it from day one since our launch, and we definitely have customers on both sides of the marketplace. And I think, you know, sitting here as a CEO as well, who's been in other businesses, I want to see revenue 100%. You know, and in terms of the valuation of the business as well, I don't want to be giving away too much. So I personally think that they do want to see revenue. I mean, I've sat at investment dinners with, you know, a guy beside me who said, I raised 5 million off the back of a napkin, and just an idea. And that's awesome, but I don't know if that happens very often.
Rebecca?
Yeah, I'd have to agree. Revenue, without a doubt. Don't get too hung up on how much it is. If you've got revenue, you've got traction. You can actually prove that there are people out there willing to use and pay for your service or product. So don't get hung up on how much it is. Just have revenue. It helps tell your story. It also helps sort of forecast what you can do. It can show that you've got paying customers. So they might be paying for one thing now, but if you plug in a few other things, they could grow to another potential size as well. So yes, to revenue.
Amazing. And what kind of questions have you guys been receiving, starting with Fleur again, on team structure, founder, co-founder, complement of your team, both of you being non-tech as well? You know, how have you experienced that response so far?
Well, I don't have technical ability in terms of, I'm not a coder, but I have had e-commerce businesses before. So I do have that background. I didn't realize that would even be a conversation we'd be having, because amongst my co-founding team, you know, we have so much experience in business. So it was very interesting to me when we started having investment meetings, and they were like, yeah, but who's the tech founder? We actually have, within the first 3 months, the person that built our website, we actually have brought on as well, so that and she's female, so that we do have that tech, we have the perceived tech ability in-house. Well, it's not perceived, we do have the ability, but obviously that was something that pretty early on we realized was going to be a necessity. I think that we've heard a lot, like, the team's amazing, we need to see more traction. When I say a lot, that was in the early days. We've only been trading, as I said, about 14 months. So right at the beginning, people were like, love it, love the concept, love the team, want to see traction. So, and that's why now is the right time for us to be doing a capital raise, because we do have the traction, we do have the team. We actually have 3 other staff as well in the business. So we're able to show some scale.
Thank you. Rebecca?
With the tech co-founder, I guess, I haven't come across it too much. I've tried to mitigate it by the fact that I've got a good relationship with my developers. So I emphasize that. We've had that since day one. You know, it's been 2.5 years. We're happy to continue. And I'm just honest, like honestly, the capital raise is so I've got money so I can bring that in-house. You know, of course, I don't want to continue paying contractors. I want to bring that in-house. So I've been quite upfront about that. I guess too, further to what Jodie and Noga were saying, it is being yourself and selling your story, because, you know, you're sitting there, you're pitching, the investors are looking at you and what you can do, what you've done and how much further you can take it. So I think if you can be really strong in yourself, your story, and back yourself and have that confidence, it will shine through, you know, having a tech co-founder or not.
Amazing. So we're going to end the formal questions there. I just want to say that was really insightful. And if any of you have questions, please pop them in chat. Sorry, we've run over time, but not finished yet. We haven't run over time for the session, just for the actual structured part. But just a couple of things that really gleamed and stood out for me from your answers from all of you. You've all demonstrated the ambition as founders, and also Jodie and Noga in your current roles, of the importance of trying to find revenue no matter which way you do it at that early stage to prove out your business, but obviously a saving grace to actually fund your own business for those early years. There is a bit of myth in the ecosystem, especially from the hype that goes on the newsreels, that, you know, you can raise money quite quickly on the back of a napkin, and you just don't even have to have a product, or your idea doesn't have to be fully thought through, you know. And obviously from all the panels that I've done and people I've met, I know that's not true at all. And I think it's really refreshing to see your journeys and how you've also explored different ways, starting with revenue and customers first, demonstrating the traction, bootstrapping yourself, then going through angel investment, also testing out VC, whether that was right, and also an exit, which I don't know if we talk too much about as a strategy. You know, that is a form of being able to, you know, get one business done and move on to the next one, as well as become a quick pathway to get to an investor. So being able to partner is really important. And I know, Beck, you've also explored industry investment as well as an opportunity. So there are many different pathways, and of course the amazing options like, you know, Tractor, as well as, you know, getting your R&D tax initiative funding earlier through Radium Capital as an example. So there are many different ways and pathways to raise and find also mentors around you who can give you some guidance and some knowledge. So we do have one question from Nairi. So Fleur, you mentioned about the pay gap. Do you think we also have a difference or a gap? And also for Jodie and Noga, for you to answer as well, in regards to dilution when you are seeking investment, do you think there is a gap in that respect?
I'm not sure if I'd say there's a gap. I can't answer that question, but what I can answer is that I think women ask for less than what men do. So they go in and they say, you know, I'll need 50 mil. And like we might go in and go, we need 5 mil. And I think we don't think big enough. And I'm taking that on board for myself as well. You know, being experienced in business, I'm thinking I've got to deliver on this and I want to exceed it. I want to kick it out of the ballpark. So I don't want to go in too high. But I think for an investor, the feedback we've had is you're a bit too realistic, Flo. We want to know the big number. So I've taken that on board, and I definitely think that, you know, it's important for us to be thinking bigger in that respect. Yeah, that's probably my experience with it.
Thank you. Jodie or Noga?
Yeah, I totally agree, Fleur. And I to the point, actually, that we at Tractor want to create a female founder product that helps female founders with a smaller amount, because that's what happens. Like, we ask for a much smaller amount, and that's where there is a gap in how much equity we sell, because you're probably still selling just as much equity, but you're just getting less cash. But I think on the counter to that is that we also make that money go a lot further than men do. And so that's where I'm excited about being able to support female founders with smaller amounts to get you going, knowing that you're going to drive that dollar really, really hard. So watch this space.
Can I just jump in for a second and say, Jodie, I absolutely love to hear that, because, you know, we went to a meeting in Sydney with a VC before we'd even pitch, they sat down and said, look, I just want to let you know, Fleur, that female founders is a trend that's dead. And I went, oh, no, we're not. I can guarantee you we're not. We're not a trend that's dead. But I have to say, God. I've also spoken to April from Tractor Ventures, and obviously, we didn't have high enough monthly revenue to be able to move forward with you guys. But she was amazing, and she did drop the ladder down, and she did connect me with other women, and I just so appreciate that, because I think that's the whole point is being able to help each other with getting to where we need to be. So I look forward to seeing that female founder group.
Oh, thank you. And we will promote the hell out of that, Jodie. So please let us know.
I'm working on it.
And can I might just add to that. I think, Fleur, you mentioned earlier that, you got led down the garden path with some investors. And I think there's a few things there that might help kind of as you plan your fundraise. One is, like, as Rebecca was saying, 100% do your research on the people you are looking to raise from, because VCs have a mandate around a specific type of investment that they're going to make. So with like Nova, for example, it's B2B software. So, that is our mandate, and that is what we tell our LPs, the people who give us money, that we're going to invest in. So we can never go outside of that. So there's no point wasting your time with investors that are just never going to match the mandate. And I think the other thing is to know that there's like lots of different syndicates out there now, angel investors who are forming syndicates that can help write bigger checks. So especially Eleanor Venture is one of those, and there's a few other groups that are kind of coming. Flying Fox, I think is the name now. They're coming together for that. So yeah, just kind of do your research, and joining a network like SBE or one of the other, even River City Labs, I'm sure if you do their accelerator, what you'll get out of that is a network of people that know a lot of the investors and can give you a heads up. And so, we often get people who've done our programs give us a buzz and go, right, these are the people that have called me, or I want to meet. What do you know about them? Are they good actors? Like, are they the right people for me to meet? And that might just save you a lot of heartache and wasted time as well.
Thank you.
Definitely.
And that's, I can't see any more questions on there. So while I do a little bit of a sales pitch, no, it's not, on River City Labs, let me just tell you guys that I used to think that it was really hard to find investors, and Beck can attest to this. It is crazy the amount of investors that are out there, and they're public, whether you're searching on Twitter, LinkedIn, Airtree, VC List. There is so many that you have access now to post COVID. I actually found a database the other day which has about 40 high net worth investors in Australia, and I reached out to a couple of them on LinkedIn, and they responded, and I was shocked because I thought that was just someone that scraped a bunch of material and found and pulled this database together. So it's pretty amazing what you can find. You do have to invest the time to research, understand who they are. I have a go-to that I tell everyone. So you find the person's name, if it's an angel high net worth that you're looking for a family office, you Google them, of course, you then look up their portfolio. I then go through the team and I see who's in there, and I see the makeup of the team and their background, because I then try and find the person in that team to connect with who's going to understand my business. So these are the types of things, and how intimate you have to get to understand who you're speaking to, much like you understanding, and I love what you said earlier, Rebecca, about knowing your customer is just as much as knowing your investor, in the same type of depth that you have to go to, which is great. Great to know upfront before you embark on wasting your time, like Noga said. So it is really critically important. Are there any other questions? I'm surprised there's no questions. Christy, did you have a question? Is that where you're raising your hand? No, you're saying great. Okay.
I have a question. In regards to how long do you think, and this is for Jodie and Noga, how long should a capital raise go for?
Jodie?
Look, I think it's so important to find the right investor. Like, you don't want to just take money from the first person, and you don't want to take money from the wrong person. So, and you also have to run your business at the same time. So, but also I think you do need to create that event and that FOMO as well. So I think you need to spend the time doing the research, understanding who it is you really would want, building the relationship, getting that sort of close. And then once you're sort of getting some momentum, then you can create an event, put a date on it, and get everyone, fearing that they're going to miss out. would be my answer to that.
Thank you.
I'd agree with that. And I'd say, like, the first time we raised money from angels, we didn't know what we were doing at all. And we went out one by one. And so we'd have this conversation and it'd go on for a couple of weeks, a couple of months, and then we'd get a no, and then we'd start again. And it just dragged on forever. And so one of the things we learned was, as Jodie said, run it as a process. And so when we went out again, we did that. We were really structured about it. We built a list. We figured out who was going to be our warm intro to all of the people we wanted to meet. We set out a timetable, and then we went out and we did it in a structured way. And I would say a typical time frame is 3 to 6 months. And that is, that's a long time when you need cash. So really plan for that. And even if you get term sheets within that 3-month period, don't forget the legals can take a long time as well. And unfortunately, the legals can take just as long if you're raising $100,000 or $100 million. They're almost the same documents. So don't forget about factoring that into your process.
Great tips. Thank you. We do have a question for you, Noga, and we'll make this our last one because we're 2 minutes over. Noga, you mentioned de-risking the business in order to derive a better investment proposition and higher valuation. Do you have any suggestions as how to value an early stage business?
Hey, Jeannie. You know what? When I decided to learn about investing, so I'd been a founder and I'd raised money and I'd been a lawyer, but I'd never invested in a company. And I thought there was going to be like this magic spreadsheet that told me how to value an early stage business. And I went and did some courses and I was waiting for all the angels to share their magic valuation spreadsheet. And there isn't one. And I wish there was some guide I could give you, but it's really art rather than science. And you hear that and it's frustrating as hell, but it really is the case. And especially with a VC investable business, there's no kind of magic revenue multiple or so on. In a consulting business, a typical business, it's different, but with software businesses, it's really about the opportunity. And so I would just say, do your research, find comparables, other businesses with similar models, similar revenue and what they've raised at. That can be hard, but there are like, search the press for international examples of companies like yours that have raised money. Have information. The more information you have, the more power you have to negotiate higher. But ultimately, it's supply and demand. So it comes down to FOMO. And if you have more investors that want to invest, you can push the valuation higher.
Amazing.
Can I also just add to that and say, I think you've just got to really believe it as well. In the businesses I've sold, they've been trading for a long time, so they've had significant revenue and history, and I'm all in on that. I know how much the business is valued at. But in a startup business, we had assistance from BDO and in our valuation, and when they told me, it almost blew my socks off, but I was happy. And my business partner constantly says to me, like, and I keep questioning it a little bit, going, really, is it really worth that much? Like, we've only been trading 14 months. And my business partner keeps saying, Fleur, like, this is the experts telling us this. We got to go all in. We got to believe it. And it's not that I don't value the business. It's just I've come from the background where I'm selling something that has the history. So I think, us believing it and backing ourselves is also, a step in that process.
Agree. I will share offline to everyone also the Cake Equity Toolkit. So Cake Equity has created this little guide, and I share it out to everyone because it actually has a few models in there. So as a starting point, if you don't have access to someone who help you out professionally, you can go in and do a few models. There's 4 and it aggregates a result for you. And it also gives you an idea of what levers you can pull in preparation for your round. If you're raising, you might have to close the gap and do some more work to increase that number up. So it gives you an idea of that as well. So we'll share that off when we send out the video in a couple of days. So thank you so much for your time to our wonderful panel. You have amazing experiences. Can I advise everyone to go find them on LinkedIn, connect with them and follow their journey. Of course, follow Jodie's new product coming out soon if you're a female founder raising capital. And thank you so much, audience, for your time and for being here on a Wednesday. And have a wonderful Open the Doors, Open for Life, Melbourne and Sydney, and continue as normal locked in Queensland into our state. But yeah, enjoy the down ramp to Christmas. Thank you everyone for coming.